It's time for another monthly market update with Bill Litton, Cross Country Mortgage, as we head into the month of August. Well, fall's right around the corner, and of course, there's plenty of news to talk about and discuss once again with Bill. So, Bill, welcome in. How are things in the office?
Things are great. It's been a really great summer so far. We've stayed busy, helping people buy houses, refinance, all the good stuff. Been riding a little wave market wise, but we'll talk about that in a second here.
Yeah, good to hear everything's going well this summer. It's hard to believe that we're almost through the summer as we're into August, and it's kind of the last bit of the heat before we move into that kind of crisp air that moves in. But I know there's still plenty to talk about here in August as it concerns home buyers, real estate agents, and people that are just kind of curious of what's happening right now with rates. So bring us up to date, kind of as we begin August here. Where do we stand? What do the rates look like right now?
So right now, 30-year fixed rate mortgage is sitting at roughly 6.8%. Okay. And that's essentially flat over the past few trading days. But if we go back and we look at where it was in the beginning of July, we were closer to 6.5%. So interest rates have definitely ticked up higher over the past, 2 to 3 weeks.
Okay. I know that's not news that home buyers are looking for, but again, we're trying to give you the update, and it's hard to predict where things are going to go, but kind of curious, what has moved, what's been behind the moves here in these recent weeks, Bill?
So essentially there's three main culprits to pushing the rates up. So number one, this war in the Middle East and Iran is causing oil prices to rise because of obviously production or delivery constraints with the oil being produced in the Middle East and traveling through the Strait of Hormuz. Now there was a ceasefire, and that, as the ceasefire was put in place, oil prices came down, and it wasn't long enough for interest rates to really feel the benefit of that. They stopped rising, but now the ceasefire has fallen apart. Okay. And higher oil prices continue to ripple through the economy. And really, oil is just attached or part of so many things that we do, that it's, showing up in inflation, which kind of brings me to the second point is inflation came out really hot in May. Now, good news is June's numbers came in a little bit cooler than expected. So that was a really good thing. But the situation in Iran and the ceasefire falling apart is causing, inflation now to, we think, probably tick up a little bit higher. And mortgage rates are super sensitive to that. So they reacted in kind. Also, I would say that, the Fed in their June meeting, they held interest rates steady, which, kind of by the time we got to the meeting, we thought that that's what they would do. There was a little bit of questioning whether they'd do that before the meeting. But the new Fed chair, Kevin Warsh, okay, so his messaging is hawkish, which means, he's really been crystal clear on his stance on inflation, and he's going to throw everything he can at getting inflation in check, which means maybe a rate hike, a federal funds rate hike. Now, personally, I don't know that that's going to happen in this next Fed meeting, but it's on the table, and he certainly is talking a good game about, using anything and everything he can to lower inflation.
All right, so a lot to watch, obviously, and I guess that Iran conflict is certainly kind of front and center here as we talk about rates and a lot of effect across the board, not just with us domestically but internationally as well. We're obviously focused on this one area, but where do you think we're headed then, Bill, over the next maybe month or two? I mean, I know a lot again hinges on Iran. You can't predict what's going to happen there, but your general feel on where we're headed.
General feel on where we're headed. And again, all of this is dependent upon any kind of major breaking news. But, I've not heard of a coherent plan to get us out of this quandary that we're in the Middle East. And although we've taken steps to replace the production losses of what's coming out of the Middle East, and that oil doesn't necessarily fuel all the vehicles in our country, but certainly if somebody here can sell abroad and make a bigger profit, they will do that. So it's all interconnected. Until we have a coherent plan or a true ceasefire, I think rates are going to remain elevated. I don't think they're going to 7.5%, but I also don't see them coming down to 6% anytime soon. So I think we're going to hang around this, higher sixes to mid sixes for a little while. A little while meaning the next quarter. If I look ahead 3 months, we're going to be there. If we get some traction with a legitimate solution in the Middle East, rates will start to come down because the inflation that we're seeing is tied directly to this conflict, meaning it's transitory. It's going to pass through the market, which means that it's not sticky inflation. It's not like what we experienced during COVID. So if we get this conflict or this war under control, rates are going to probably come down a little bit as inflation passes through. So we do feel like there's good news on the horizon. We just got to get to that point.
Yeah, I think that's the hard part, is not really knowing the timeline of that at all. So I guess if you are a home buyer, and I guess now is as good a time as any if you are ready to buy that home, not waiting to try to catch a sharp decline in rates, Bill, because it looks like, hey, they might come at some point, but waiting around for that, there could be a cost to that as well.
So great point, Ben. Waiting for a sharp decline in rates is, what you're going to find is there's going to be an increase in the purchase price. So the cost will be, at some point, you're either going to pay a higher rate and pay for a higher purchase price on the home, which means you probably borrowed more money at that point. So if the numbers fit in your budget, and we're really big on budgeting, if the numbers fit in your budget, let us walk through the numbers with you and have a plan for a possible refinance in the future, all the while you're taking advantage of the appreciation on the increase in the value side and the amortization as you pay the loan down.
All right, very good. Remember, the couple different ways you get in touch with Bill at Cross Country Mortgage. If you want to begin discussing lending options, find out what's available, find out what you can do to maybe put yourself in a better position, Bill can help you with this. Again, you can always go to smartmortgageshow.com or just text the word LEND, L-E-N-D, to 21,000 to begin that conversation as well. But it's an opportunity to, hey, at least start figuring out kind of where you stand, what you can do moving forward, and hey, put yourself in the best position, because when that house comes around that you really want, it's always best to be ready to go. So again, if you have any questions, please reach out. But we'll have more to talk about probably in September. Hopefully some better news. But again, no matter what it is, we'll give it to you here on the Smart Mortgage Show. So Bill, thanks as always for the update.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.